Good morning, everyone, and we are going to cover the ZOOPLA UK rental market report for March 2025. Now, some interesting stats and statistics and things we want to cover today, so let's dive right in. Now, some things may surprise you when I cover this. Now, let's just remember that it's the UK rental market. Obviously, we're here in Scotland and Fife, but as I've said before, to understand your local market and what's going on around you in the immediate area, you do need to look at the bigger picture and the UK market as a whole and how that has a knock-on effect on where you are individually, whether it's here in Fife, across Scotland, and indeed the rest of the country. Kieran's joining me today and will help us go through these stats and look at the current market as it stands as of March 2025. So, let's run through the summary of what we're going to cover today. Now, surprisingly, obviously, annual rent inflation for new lets is running at the lowest level for 3.5 years. We've also got rent increases, they're going up by 3% over the last year, but that's actually down from 7.4% a year ago. We've got supply and demand. That balance has been narrowing slightly, with 11% more homes for rent, and rental demand up at 17%, down at 17% lower than a year ago. We've also got 12 renters chasing each home for rent, at least. Karen, you would argue that we've got more than that.
Depends on the value. I mean, we have seen things, obviously, as we'll cover, kind of starting to slow themselves down, or at least balance themselves out anyway. So, but I mean, come out of the pandemic, it wasn't going to be feasible to keep the market we were in. It was absolutely crazy. So, I mean, probably for everyone's perspective, it's kind of good it's calmed down a little bit and balancing itself out slowly. But obviously, we'll cover more detail in how it's doing so.
Yeah, I mean, obviously, this is an average for the UK, and it will differ in certain areas and things. But on average, 12 renters chasing each home for rent. That's actually down 42% on the 2022-2024 levels, but it's still higher than what we were at pre-pandemic. Affordability is a growing constraint on rent rises, with the annual cost of UK rents increasing by £3,000 a year to £15,400. The rental market needs more supply. I'm sure you'll agree and stand testament to that. Rental reforms, which is obviously England, and other proposed policies will limit new investment and the supply of growth. And also, UK rents are expected to increase around 3 to 4% over the course of 2025. Now, I've got a wee bit of a chart here that ZOOPLA provided. It's not the best because of the backdrop colour. Hopefully you can see that clear enough. I'll explain it to you just briefly. It is quite a simplified version. If you see the purple bar there, that is in reference to the pre-pandemic, like 2019. And then the darker colour there, which is lower, is versus last year, which is 2024. So if you see that first bar there, that's up at 79%. Pre-pandemic, we're down at minus 17% versus the 2024 figures. This is rental supply and demand imbalance and how that's narrowing, by the way, just so you're aware. And then if you look at the next column, the purple bar is then minus 22 pre-pandemic, and that's stocks of home for rent. And then if you look at 2024, it's up 11%. So yeah, not the best graph because of the backdrops. So I do apologise for that, but you get the gist of that. I think it's good to depict things in a visual way rather than us just run through numbers and statistics, because it can be a bit confusing. So we've got a few graphs there that ZOOPLA's provided to back these stats up and demonstrate and show you that quite clearly. So that was the rental demand and supply and how that's narrowing, and kind of the rundown of what we're going to cover this morning. Karen, what about the rental market and things becoming a wee bit more balanced, you said, obviously, and indeed in Fife, but across the country as well?
Yeah, so we've seen obviously a dramatic high come 2020, 2021, and obviously things have started to balance themselves out. I would say probably since 23. It was still quite high then, but obviously we are seeing it starting to balance out, and which has really become apparent in 2024. We've seen a real change in it since obviously those post-pandemic levels, which was absolutely chaos. It was crazy. So
a good word to use. I think we were using it the other day, and I think it's like the market's softened slightly.
Yes,
because we've went from such a busy, competitive market, both sales and lettings, and it started. I mean, I would usually say it's leveled out a bit, although we're still very much like, if it's sellers, we're still in a seller's market and things, but soften's quite a good word. But yeah, let's see how the rental market's become a wee bit more balanced, as we'll talk about today.
So the rental market conditions are steadily balancing themselves out. They are improving after 3 years of chronic undersupply and excess demand, which is what we've seen firsthand. But there still remains a mismatch in supply and demand, which is not going to rebalance anytime soon, meaning the continued upward pressure on rent.
Yeah.
So rents are increasing at their lowest rate in 3.5 years. This is more to do with worsening rental affordability than improvement in supply of the homes for rent. The average agent has 13 homes for rent, which is up from a low of 10 in 2023, but still 22% below the pre-pandemic average. And I mean, we've seen this. We had a lot of landlords that have shifted over that time as well, just obviously different legislation that's come in. Quite a few have got scared on mortgage rates as well. So we have seen, there's just so many different factors that have come into play over the last 4 or 5 years that have obviously really shifted the scale when it comes to this. But the household cost of living also is taking an effect on it for private renters, because it has rose faster than any other group in 2024.
Mm-hmm. Yeah.
Obviously, the private rental market really needs more supply to boost the choice and help renters on a lower to middle class income who have struggled to keep up with the pace at a 24% increase of rents and new lets over the last 3 years. So obviously there's been and again, we've seen this firsthand, such a spike in rental costs, but again, that's been pushed up by lack of supply and obviously mortgage rates as well. Landlords have had to increase their rents to keep it actually an investment for themselves.
Yeah, and as you say there about obviously renters at the lower and kind of middle incomes and things as well, we've noticed that rental properties in the higher price bracket are starting to, it's not as easy. I mean, let's wind back, like you say, 2022, 2023, they would rent,
they were crazy. They were so popular. Your higher end ones they were really popular. I mean, everything was really popular back then, but still your higher end ones, whereas now we are seeing them take a bit of a hit, and obviously making sure that they're fine if they're on at the right price point, but if you're not hitting the ground running with that right price point, they are sitting and struggling a bit. So making sure that you are going on right there is key for you not sitting on the market.
So then it's fair to say, obviously, when we're meeting landlords and things, it's really important to be realistic about that price point and not completely overshoot it, because you'll end up on the market for a long time. You've got a bigger void period, your occupancy rate drops, your income obviously drops. Whereas if you're realistic in the first instance, then you'll be able to secure a tenant and hopefully a long-term tenant. And that's why we're saying, when we bring on like your typical 2-3 bedroom semi-detached house in a good residential area at that mid-market level, anywhere between 600-700 up to 1,000 are still renting and performing very well.
Yeah, and we easily have a really high demand for people that are looking for those properties. I mean, as soon as they hit the market, I mean, they're saying here 12 to 1 property. I mean, there's easily over 50 for your mid-market ones, and that's easily. So it just means obviously there's that many people looking in your mid-market. So if you are looking for an area to be able to invest in, that is the proof's in the pudding there for it. Your mid-market ones are the ones that are performing the best.
Yeah, so we've got a chart that goes with this. So this is rental supply recovering slowly, and this is provided by ZOOPLA as well. So I'll just talk you through this. This one's a bit clearer because it's got a white backdrop, so that's good. So yeah, rental supply recovering slowly, and you've got the purple bars there. These represent, so the up the axis at the side, we have 0 to 20, which is the obviously the unit, and then along the bottom we've got it's the number of homes per agent, and this is data as at February each year of these years. So along the horizontal axis, we have 2017 right through to 2025. So in 2017, you'll see there is 17 homes per rent for rent per agent. 2018, it's still at 17. 2019, 16. Bear in mind, this is pre-pandemic. 2020, it's 15. Now remember, the lockdown and the pandemic hit around March time in 2020, and then back up to 17 in 2021, which was post-pandemic. And then you can see that sharp drop. Then 2022, we've got 10 homes for rent per agent again in 2023, and it started to creep back up. 2024, we've got 12, and then this year so far, 2025, we've got 13. So that's number of homes for rent per agent across the years.
You can see as well quite a clear bit there between 2021 and 2022 when we hit inflated mortgage rates, and also the change in legislation as well, which really impacted landlords. So, I mean, you can see how many of them probably exited the market at that point, just from the lack of stock that we had. Yeah,
definitely. And I'm sure people across the country will have seen that. Now, let's look at things like, and this is the UK market update. So we're going to talk about rental reforms. Well, I'm going to talk about rental reforms and other policies and things that have limited that supply growth. So, I mean, the private rented market in England is facing some major policy changes, which are likely to limit new investment and growth in the stock of rented homes. Now, this follows on from tax changes and higher mortgage rates, as you've said, Karen, which have caused many landlords to exit and keeping rental stock levels kind of static. Do you know, it's around about 5.5 million since 2016. On average, that's the amount, and it's kind of kept that figure relatively the same over that course of time because of these, these policies and like things like the rental reform. The new renters' right bill is likely to come into force later on in this year, into 2025, resetting that relationship between renters and landlords. But it's also increasing that complexity and cost of being a landlord. And investment in new supply will be lower as landlords assess that impact on them on an individual basis. Just to reiterate, the renters' right bill and reform and things is England, not Scotland, but we're talking about the UK here. In addition to that, the government is also consulting on the need for private rented homes to have their energy performance rating, A, B, C, before they can be let out. And that is going to be from 2028. You've already, if you have a rental home, and that's across the country, this is Scotland and things as well. If you have a rental property, I would be pushing at the moment to try and see how you could improve the energy efficiency rating. Or if you're buying a new investment property, look at the EPC rating, because minimum banding is going to be coming into play very, very soon. And now is your opportunity. Now, there will be funding and things available for existing properties to be brought up to that level. Minimum banding will be C. And almost half, that's around about 45%, but almost half of rented homes require investment to get from the average, which is a D rating at the moment, up to that C rating. And almost 1 in 5, which is about 16%, of private rented homes are currently E, F, and G rated. And as a result, we would be more at risk of being lost from the rental market, because they'll struggle to get that up to a certain level and possibly exit the market. If you're in that position, here in Scotland anyway, I know that there is allowances made, and if you spend X amount, I'm not sure of the figure at the moment, if you spend X amount doing improvements and things to improve the energy performance rating and you still can't reach that minimum banding, it will give you an exemption. I'm not completely crystal clear on the details surrounding that, because the government's kicked the can down the road so many times with this, but there will be allowances made and exemptions if you have already demonstrated I've spent X amount trying to make improvements. But Karen, we've got a lot of properties here. We're semi-rural location. We have a lot of farm cottages and stone-built, traditional-built properties that unfortunately just won't be able to make the C rating.
No, and I know and there's landlords that we've got one in particular, and they've spent thousands and they've done everything they possibly can to get this property up to a better EPC banding. And I think despite all the money they spent, I think it maybe brought them up one band, and they're still at like F or not F, not as bad as F, but there's still at quite a low banding that wouldn't make that. And
I think I know what you're talking about. I think there's still an E borderline and a D.
Yeah, that's what it is. Yeah.
I think it's the one you're talking about. Yeah, but in that example, they could demonstrate, look, we've invested X amount, we've done all these things that were recommended, and we're still not quite there, and it's just due to the build of the property.
Yeah, and like you say, we are a quite semi-rural area, and we do have all these farm cottages that realistically they're never going to meet that requirement for it. But if you are looking for, as you say, new investments, it's definitely something good to keep in mind as to what EPC banding that you're going to be on. And even for your tenants as well, just obviously having a more energy efficient home is going to reduce the bills that thgoing to be paying on it. They're not going to have to heat it as much or have as much electric running for it as well. So it will obviously improve that side of it for them, and less running costs, obviously longer term tenant for it.
Yeah, you're absolutely right. Of course, it'll have a positive effect on tenants in terms of their outlay on utility bills and things as well. It all goes hand in hand with helping with the cost of living situation, which is still very much ongoing across the country, not just here in Scotland. Obviously, the whole UK is having that conscious thought process about when they're renting a property, how much am I going to be spending on council tax and utility bills and things as well. So that's all something to take into consideration. Also, UK rental inflation, lowest for rental inflation is its lowest for 3.5 years. Now, the average monthly UK rent is it's £1,284. Now, that is 3% higher than last year. This is the lowest rate of growth for 3.5 years, and more than half the rate a year ago, which was 7.4%. And remember going through these stats at 7.4%, as the supply and demand imbalance narrows, as we spoke about just earlier. There has been a modest 11% increase in the number of homes available for rent over the last year, while rental demand is down by almost a fifth, which is like minus 17%, as we showed in that graph. Now, this mismatch between supply and demand remains a challenge, with 12 renters currently chasing each home, as we says, but I think it's probably more than that in some instances, and I'm sure other agents and landlords might agree with us that it's higher than that, but as a UK average. And this is almost half the level of the competition for rented homes recorded between 2022 and 2024, when rental demand was at its strongest. But still, it's double the pre-pandemic levels. Now, let's look. I've got a graph here which looks at the inquiries. This will be quite interesting, Kim, because, inquiries that come through per rental property can be an interesting subject. So let's have a look at these. So this is inquiries per rental home. It falls but remains in double digits. So if you look at these lines here, the top line, which is the dark line, is 2022 to 2024. We've got units up the side here and the month along the horizontal axis. 2022 to 2024, higher mortgage rates and higher net margins. You can see that as it comes along from January right through to December. And as I say, that's 2022 to 2024. The grey line on the bottom is 2017 to 2020, which is quite level. And you can see that along the bottom. I'm pointing to the screen like you can see me, but I'm sure you could see that along the bottom quite level. And that's a normal rental market. And then in between here, we have the pinky the pink line, which is 2021. Now, that's re-economy. That's when the economy reopened kind of post-pandemic. And you can see it's kind of level along there and then jumps right up. Come July, August, and into the end of the year, it spikes right up. And then the purple line that's just only to the February is supply and demand starting to narrow for this year, 2025. And obviously we're only at February this year, so that's why that stops short, but you can see it starting to dip slightly there. So hopefully that kind of gives you a wee bit more of a visual representation of what we're talking about in terms of the rental homes and inquiries, and how rental inflation and things is having that effect.
Yeah, certainly interesting to see over the last few years anyway.
Yeah, I mean, it does change. Obviously, you can see that that normal rental market post-pandemic, then how it spiked right up, how the mortgage rates and things have had an effect on that, and then how our narrowing supply and demand has been represented for the start of this year. And when we do the next quarterly update, I'm sure we'll have an updated version of that, and we can see where that line for 2025 is in correlation to the other years.
Yeah, and as you said, obviously the demand's slowing, but the rental supply is increasing, slowly but surely. So the rental demand has cooled across all regions of the country over the UK over the last year. So this is largely a result of lower levels of immigration for work and study, as well as a greater first-time buyer demand, most of whom have originated from the rental market. And when we see that quite a lot, it's great. Obviously, our tenants getting on the property ladder for the first time, or you've got ones that maybe have been sitting in rented accommodation until the interest rates have calmed down a bit, and now obviously they're looking to buy again. So we've seen that shift as well. But obviously the average annual cost has risen by 3,000 over the last 3 years, and these growing rent costs are also likely to be suppressed by demand for new lets. So encouraging renters to stay put for longer to avoid higher costs from moving home, which also reduces supply. So again, we've got tenants that have been in properties for years, and although they've had rent increases, it's maybe still not going to be the same level as to if they were to move to a new property and they're at the market level. So it can be more feasible for them to stay put in their current property and more cost effective for them to stay where they are usually.
Mm-hmm.
The number of homes for rent has increased all over the areas of the UK except the West Midlands, where the supply is 10% lower than last year. The number of homes for rent has grown most in the North East, as of 23%, in Scotland by 29%. So we're still feeling that increase in Scotland here as well. The rise in supply is welcome news for renters, but supply remains below pre-pandemic levels across all areas except for the East Midlands. So we're still getting that increase, but it's still not quite where we need to be for the amount of people that are looking to rent property.
Yeah, because I mean, like you say, it's still not quite pre-pandemic. And when we think about, obviously we've come from that post-pandemic, which was just like a lot of property and a lot of demand and all the rest of it. But when we think of the normal market, we think of pre-pandemic levels, and we're still not quite there. So we're lacking in supply still, although we are probably still ahead of most parts of the rest of the country.
Yeah, very much so. Rental inflation ranges from a low of 1.1% in London to 6.3% in the North East and 9% in Northern Ireland. In addition to London, rental inflation has slowed rapidly in Scotland and the East Midlands over the last year, as the number of homes available to rent does increase. So as we say, we have seen that increase for it, which obviously has kind of calmed the market a little bit, which is prevalent for the amount of people that we have looking, but still, as I say, anything under £1,000, you've still easily got about 50 plus people looking to inquire about it in the first place.
So not 12.
Yeah, not 12, no.
And rents rising faster, and you mentioned about London and obviously the cities and things, and rents rising faster in the more affordable cities. Obviously London's possibly not one of the most affordable cities, but cities up here in Scotland and things, rents are starting to rise. So rents are rising more slowly than average earnings, around about 6% annual rise across most cities, which will be a welcome news for renters who have, faced that steep rent increase over the last 3 years. There's been quite a lot, so to have that wee bit alleviation on the rent increases, especially in the city areas, will be a very welcome thing for these people. At the city level, annual rental inflation ranges from the minus 1.2% in places like Nottingham and 0.4% in Leeds, and then 6.2% in places like Newcastle and things as well. And that's really highlighting how localised changes in supply and demand can shape the trajectory of rental costs, and rising levels of rents and supply rental supply in places like Nottingham, and they are actually having an impact on the rent levels. So, I mean, I've got some actually here, so that ZOOPLA's provided quite a good one actually, which will show that in a lot more detail visually than me rambling on about percentages. Because although I've had it in front of me, it might not be clear to you guys that are watching. So hopefully this makes it a bit clearer. So this is the entire country and all the main cities, and the percentage up the vertical axis there, and the cities along the bottom. The grey bars represent annual average over the last 3 years, and the purple is the last 12 months of rental inflation and how it's slowed across the UK cities. We'll start off firstly there at Nottingham, as we was talking about. The annual average over the last 3 years is up there about 5%, and now we're down 1.2%, as I said. Leeds, you can see, is up there. That's about 5% again. It's up, and that's just up 0.5% in the last 12 months. And then you can see there's Brighton, London, Glasgow, Aberdeen, Sheffield, Bournemouth, and then Bristol, Bradford, Birmingham. There's Edinburgh there. We're up at just shy, about 9%, 9.5% on the annual average over the last 3 years. And in the last 12 months for Edinburgh, we're sitting at about 3% there, as we said. And then you've got Manchester, Southampton, Portsmouth, Cardiff, Liverpool, Hull, Newcastle, and then the UK as a whole. Average annual over the last 3 years is 5%, and we're down about 2 point. We're at 2 in the last 12 months. It's about 2.2, 2.3%. It's quite hard to do that graph to the point, but you get the general picture there, and you can see that incline across the cities over the course of the last 12 months in the purple, from Nottingham at its lowest and right up to, and Edinburgh is just about 2/3 of the way along there. So
yeah, we can see Edinburgh seems to have, although it's still dropped, it's kind of kept its best standing out of the three Scottish ones, between obviously Edinburgh, Aberdeen and Glasgow. Obviously Glasgow seems to have dropped the most, and Aberdeen sitting in the middle there. It's not too far off of Edinburgh actually, but obviously I mean, it's Edinburgh, so realistically it was probably going to keep the highest one there. But so it's interesting to see how our three cities up here have fared out on that. Yeah, definitely.
So that's good, and it's a good visual representation of the rents rising in these city areas. So yeah, let's round up and have a bit of an outlook about what we've covered today. There's quite a lot of stats and things in there, guys. You can have a look at this. This will be on the reruns. We're recording this as well, so you can look at this back. And if you've got any questions, you could come to us and ask about, the supply and demand, the rental rise in the area, and indeed what inquiries are like, and as we were talking about, what properties perform better in what areas and things as well. But an outlook for the rental costs and things in the coming year for 2025, we expect demand for rental homes to continue to exceed availability and supply in 2025, but to a lesser extent than we've seen in the recent past. And the overall stock of rented homes is unlikely to increase in size in the coming years due to the policy changes that we've covered today, which is impacting landlord and investors' profit margins and operating complexities for landlords. And it does make it a bit difficult, but I think if you've made sound investments and you've got a good team, and I don't mean just like a letting agent team, but if you're a self-managed landlord, your team should involve a good letting agent and a good financial advisor or mortgage broker and insurance broker, and have all these good connections and all these people that are going to help your investment be as viable as it can. Lower levels of net margin have helped to moderate rental demand. Net margins in 2024 was estimated to be 720,000, which is down 20% from 906,000 in 2023. And this decline is expected to continue into 2025 due to the stricter visa policies and increasing levels of emigration, particularly among international students and things as well. What about affordability and things, just to round us up, Kim?
So affordability remains the primary constraint on rental inflation, and as the primary factor being behind rents rising at their lowest rate since August 2021. However, there remains scope for rents to rise at above average rate in areas where renting remains more affordable, including areas adjacent to big cities. And again, we see that we've got Edinburgh literally just across the bridge, and obviously we get good rents here in Fife, but you can still pick up properties at affordable rates because you're not in the city centre.
And generally, you could commute to Edinburgh within the hour from most parts of Fife.
Yeah, and so yeah, definitely being on the cusp of the city is still a good aspect to have there. But we are expecting the rents to increase by 3 to 4% over 2025, as slower growth in the larger cities is offset by faster growth in more affordable markets. So this is minimalising the negative impact of policy change on supply, but it is essential to help most renters who are in lower to middle class incomes.
Yeah, I think that's quite an important point. And we've seen that trend here.
Firsthand.
Yeah, definitely. And I'll just one more graphic to help us round up today. And this is obviously our rental highlights for the entire UK, but it's quite a good representation of, hopefully you can see that clear enough, of the entire country. And you can see up in Scotland there, number 12, the highlight number 12 is Aberdeen. Number 8 is, number 12, Aberdeen is the annual percentage change in rent is 1.8%, and the average rent is £716. Number 8 on that, the marker there, number 8 is Edinburgh, and the annual percentage change in rent there is 3%, and the average rent is £1,320. And then the marker for number 13 is Glasgow. Percentage change in rent is 1.3%, and the average rent is £982. And there is the rest of the country there, but we'll just stick to Scotland for the purpose of this show, because we are here in Fife, Scotland. But I think it's important, like I said at the beginning, to always remember that the market across the whole of the UK and what's going on has a knock-on effect in all regional areas, and to have that knowledge of the bigger picture of how cities and individual areas are performing across the country and what they're experiencing will give you a better idea of how the market is performing in your own area. So
yeah,
that's that.
To take a wee step back and have a look at the broader picture for it.
Yeah. Thanks for joining me, Kieran. It's great to go through all that. Obviously, thanks to ZOOPLA for pulling all those stats. I do like ZOOPLA's outlook and their projections and their stats and things that they pull from for the rental market. They are really useful and helpful to us as agents, and being able to provide a better and clearer vision to you guys as landlords and investors of how things are performing in the area. But other than that, you can reach out to us directly if you have any questions about what we spoke today, or anything else lettings related. So we'll leave it today, and thanks everyone for watching. Yeah, if you're watching on the rerun, you could jump in the comments. We will still pick that up. And until next time, guys, we will see you later. Thanks.
Bye.
Bye.